Most people think silver is just another boring metal, something that sits quietly behind gold, never really stealing the spotlight. But what if I told you that right now, behind closed doors, one country is quietly making moves in the silver market that could shock the global economy? And even more surprising, most Western media either doesn't understand it or doesn't want you to understand it. Because what China is really doing with silver is very different from what you've been told. And today we're breaking down 5 major lies that keep getting repeated, while the real story stays hidden in plain sight. Before we dive deeper, take a second and hit, like if you care about understanding how global money really works, not just what headlines tell you. And if you want more deep, no-nonsense economic breakdowns like this, make sure you subscribe to Empire Economics, because what you're about to hear is not something you'll get from mainstream channels. Now let's get into it. The first lie Western media keeps repeating is that China doesn't care about silver, that it's obsessed only with gold. This idea gets pushed again and again, as if silver is some forgotten asset in Beijing's long-term plans. But this couldn't be further from the truth. China understands something very important that many Western analysts ignore. Silver is not just a precious metal, it is an industrial metal. It sits at the intersection of money, technology, and power. Every solar panel, every electric vehicle, every advanced circuit relies on silver. And China happens to be the world's manufacturing hub for all of these industries. When Western media says China is only hoarding gold, they are simplifying the story to the point of being misleading. China doesn't need to loudly announce its silver strategy. It doesn't need flashy headlines. It quietly secures supply, controls refining, and locks silver into long-term industrial demand. This is not accidental. This is strategic. And while commentators laugh it off as insignificant, China keeps tightening its grip on the metal that modern technology cannot function without. The second lie is that China's silver demand is weak and slowing. You'll often hear that China's economy is struggling, manufacturing is declining, and therefore silver demand must be falling too. But this argument ignores where demand is actually coming from. China is not focused on low-value manufacturing anymore. It's moving aggressively into high-tech production. Solar energy, EV batteries, advanced electronics, and military technology all require silver. And in many cases, there is no cheap substitute. China's push toward green energy alone should tell you everything. It is installing more solar capacity every year than most countries have in total. Each solar panel uses silver. Multiply that by millions, and suddenly the idea of weak demand collapses. What's really happening is that China's silver demand is becoming more targeted, more strategic, and more difficult to track using old Western models that were designed for a different era. The third lie is that China relies on the global market and has no real control over silver pricing. This is where things get really interesting. For decades, silver pricing has been dominated by Western paper markets, especially futures trading. These markets often have very little connection to physical supply and demand. China understands this weakness perfectly. Instead of fighting the paper system directly, it built its own parallel infrastructure. Through domestic exchanges, long-term supply contracts, and state-aligned enterprises, China reduces its exposure to Western price manipulation. It doesn't need to set the price publicly. It just needs to make sure it gets the metal it needs at scale over time. And while Western traders argue over charts and technical indicators, China is thinking in decades, not quarters. This is where Empire Economics often highlights a key difference between Western and Eastern economic thinking. In the West, markets are treated like casinos. In China, markets are treated like battlefields. Control of resources is control of the future. Silver is not a trade. It is a strategic input. The fourth lie is that China is just a buyer, not a controller of silver supply. In reality, China is deeply involved across the entire supply chain. From mining investments in Latin America and Africa to refining capacity at home, China positions itself at every critical choke point. Even when silver is mined outside China, it often ends up being refined, processed, or consumed within Chinese-controlled systems. This creates a quiet form of leverage. If global supply tightens, China is less exposed than countries that rely entirely on open markets. If industrial demand spikes, China doesn't panic buy. It simply uses what it already controls. Western economies, on the other hand, suddenly discover shortages, rising prices, and broken supply chains. By the time media starts talking about a silver crisis, China has already planned for it. The fifth, and perhaps biggest lie, is that silver doesn't really matter in the big picture. That gold is money, oil is power, and silver is just a side character. This belief is incredibly dangerous. Silver has always played a dual role in history. It has been money, and it has been essential for technology. Today, that second role is more important than ever. Modern warfare, surveillance systems, renewable energy, and digital infrastructure all depend on silver. China understands that future power is not just about currencies or armies, but about who controls the materials that make advanced systems possible. Ignoring silver is not a mistake China is making. It's a mistake others are making. Now here's where the story gets even more interesting, and why you should stay with me till the end of this series. China doesn't need silver prices to explode tomorrow. In fact, low and stable prices work in its favor. They allow accumulation without attention. They discourage Western investors. They create complacency. And when the system eventually feels pressure, the shift will look sudden even though it was years in the making. This is why so much mainstream coverage feels disconnected from reality. It focuses on short-term noise instead of long-term positioning. It asks whether silver will go up next month instead of asking who will control supply 10 years from now. And that's exactly the gap we try to close here on Empire Economics. As we move forward, the next part will expose how paper silver markets distort reality, how China uses patience as a weapon, and why a global reset in industrial metals may come from the least expected direction. If this topic is already making you rethink what you thought you knew, stick around. And later in this video series, I'll also want to hear your thoughts, because the smartest insights often come from the comments. For now, take a breath and let this sink in. China is not reacting to the silver market. It is shaping its future quietly, methodically, and without asking for permission. And what comes next may change how the world values silver forever. To really understand what China is doing with silver, we now have to talk about something most people completely ignore: the difference between paper silver and physical silver. In the Western financial system, silver is mostly traded as numbers on a screen: futures contracts, ETFs, derivatives, and promises to deliver metal at some later date. The problem is simple but shocking. There is far more paper silver traded every day than actual physical silver that exists. This creates an illusion of abundance, even when real-world supply is tight. China sees the system for what it is: a fragile structure built on trust, leverage, and assumptions. Instead of playing this game aggressively, China steps around it. It focuses on physical delivery, long-term contracts, and stockpiling through industrial use. When silver is locked inside factories, solar panels, electronics, and infrastructure, it is effectively removed from the market. It doesn't come back easily. It doesn't get recycled quickly. And it certainly doesn't help meet future shortages. Western media rarely explains this difference because it exposes how weak the pricing mechanism really is. If prices were based purely on physical supply and demand, silver would likely look very different today. China benefits from this disconnect. As long as paper markets keep prices calm, accumulation remains cheap and unnoticed. Another misunderstood piece of the puzzle is patience. China does not think in election cycles or quarterly earnings reports. It thinks in decades. This is where many analysts get confused. They expect dramatic announcements, bold statements, or visible moves. But China's strategy is quiet by design. The most effective economic moves are often the ones nobody talks about until it's too late. Consider how China handled rare earth elements in the past. For years, it dominated production, while prices stayed low and global dependency increased. When restrictions came, the shock was immediate. Silver may not follow the exact same path, but the logic is similar. Control supply first, let others stay complacent. Then, when demand becomes critical, the balance of power quietly shifts. This leads us to an uncomfortable truth for Western economies. Many countries have outsourced not just manufacturing, but material security. They assume markets will always provide what they need, but markets only work smoothly when supply chains are stable and politics stay calm. In a world moving toward fragmentation, trade tensions, and strategic competition, that assumption becomes dangerous. Silver sits right in the middle of this vulnerability. It is essential, but undervalued. It is consumed, not just stored, and once it's gone, replacing it is neither fast nor cheap. China understands this. It prepares for stress scenarios while others debate price targets. At Empire Economics, we often talk about how real power shifts don't announce themselves with headlines. They show up later as unexpected shortages, supply bottlenecks, or sudden price spikes. By the time the public notices, the positioning is already done. China's approach to silver fits this pattern perfectly. Now, let's talk about the psychological angle, because this might be the most underestimated part of all. Western investors have been trained to ignore silver. It's seen as volatile, boring, or disappointing compared to tech stocks or crypto. This lack of interest is not a coincidence. When an asset is ignored, it becomes easier to control quietly. China doesn't need Western retail investors to pile into silver. In fact, it prefers they don't. Low enthusiasm keeps prices stable. Stable prices keep attention away. And lack of attention allows accumulation to continue without resistance. This is not manipulation in the loud sense. It's strategy through indifference. At the same time, China keeps expanding industries that naturally consume silver. Electric vehicles, renewable energy grids, advanced electronics, and defense technology all scale up year after year. Even if investment demand stays weak, industrial demand alone tightens the market slowly but relentlessly. And here's something most people don't realize. Unlike gold, silver gets used up. A gold bar can sit in a vault for 100 years. Silver gets embedded into products, scattered across billions of devices, and lost in tiny amounts that are never recovered. Over time, this creates a silent drain on above-ground supply. China is building an economy that accelerates this process. So what happens when this quiet strategy meets reality? Not tomorrow, not next month, but eventually. The paper market will still say silver is plentiful, but manufacturers will feel delays, costs will rise. Governments will start asking uncomfortable questions about supply security, and suddenly, silver will matter again. When that moment comes, narratives will change fast. Media will rush to explain why silver is suddenly important. Analysts will scramble to update forecasts, but China won't need to explain anything. It will simply continue doing what it has been doing all along. This is why understanding silver today is not about predicting short-term price movements. It's about recognizing long-term positioning. China is not betting on hype, it's betting on necessity. And necessity always wins in the end. Before we wrap up, this is where I want to bring the conversation back to you. Do you think silver is being deliberately underestimated, or is China simply smarter about playing the long game? Drop your thoughts in the comments, because these discussions matter more than most people realize. And if you found this breakdown useful, share it with someone who still thinks silver is irrelevant. On Empire Economics, our goal isn't to scare or hype, it's to help you see the chessboard, not just the next move. China's silver strategy is a perfect example of how power shifts quietly, patiently, and without permission. Those who understand it early have an advantage. Those who ignore it usually learn the hard way. Thanks for watching, and I'll see you in the next one.